I actually had never heard of this before, so I'll be looking a little bit deeper into it later today. But there still is buying. There still is buying activity, and that is based on conviction in the mining space. Does that red record the sessions every day? I believe so. Cool. Fed minutes were a big nothing, right? December Fed minutes showing the most dissent since 2019, despite the rate cut. There are conflicting views on inflation and employment, but there were reports this morning that adjustments in inflation expectations could obviously signal another cut, which would be in likely March. You want to be paying close attention to CME FedWatch, CME Group. And what you're seeing here is for January, the odds of the market pricing in a rate cut currently sitting at about 14%. But out into March, that's where the attention really is. It's that first quarter, and that coincides and times very interestingly with the period when money starts to leave money markets, starts to leave banks, simply because people have to pay taxes, businesses have to pay taxes. And once again, this market has done quite well this year. So there will be sizable capital gains taxes that will be collected and must leave the money markets and must leave personal accounts into next year, particularly brokerage accounts, and that can lead to additional stress in the financial system. We've seen this. In fact, it happened in 2024 and happened this year as well. Very short period of time, but it leads into that third Friday of April, and then typically we see an adjustment period where the Treasury General account is built up and then spent back into the economy, which provides a little bit of stress relief to the financial system itself. But keep a very close eye on the TLT and the dollar continuing to show weakness. That is the trend for the moment. Yuan is improving while the U.S. dollar is weakening. There are conflicting views on the employment side, but as I've said time and time again, I don't really put as much faith anymore into the inflation and employment dual mandate of the Federal Reserve. I still firmly believe that their job is to provide financial stability and to prevent a debt deflation crisis here in the U.S. We'll talk about that in a moment, Hillcroft. What else is happening? This is really the key thing, and I think this answers your question about the FNGD. It has been above those two key moving averages, which, once again, I was talking about this last night, and we were laughing about it. But the key thing here is it hasn't been that violent of a move that typically aligns with what we've seen with previous liquidity events. But it does signal that there are potential liquidity problems heading into the beginning of the year. So once again, my thesis on the FNGD is that this is where leverage in the system is leaving, particularly in those top S&P 500 stocks. It is above that key moving average. We do have a momentum signal on the intraday that is currently sitting flat. So it kind of does have a little bit of a risk-off event. Liquidity is on, right? The repo market and the Fed continued that support, but the markets are lacking conviction. And since we are near that top of that liquidity cycle for the United States, the key thing here is that we might be looking at a sideways market well into April. And what that means is liquidity can prevent the breakdowns, but it can't force upside without a major catalyst. And it's very, very difficult to look out into this market right now and say, what is the catalyst that is going to drive this market to 7,100, 7,250? It could be foreign capital coming into the United States, but that actually seems a little bit of a risk issue. There may just be, at the start of this year, the possibility of people just taking some time off and trying to reassess this market. Very comparable to the way that 2022 started, particularly that final month of 2021, when we were at that period where there was ample capital in the system, but it was preventing a breakdown, but it was not providing us with that next catalyst up. Keep a very close eye on the momentum signals. Keep a very close eye on the S&P 500. Watch its key moving averages. That 50-day moving average, that 50-day EMA is a key line in the sand for the Russell 2000 and the S&P 500 because a lot of funds that trade those two instruments shut off when you break under those levels. So that's where we want to be paying attention to insider buying. That's where we want to be paying attention to momentum. And I got to go into 2026 with a little bit of caution, given the fact that we are seeing this kind of lack of conviction and lack of catalyst to take us somewhere. But I am sure that someone else on this broadcast, that someone else at Theo, has a reason why, and probably Gianni, to tell us that the S&P 500 is going to 8,000. We will find that out. And to be honest with you, it could very well be China engaging in some level of monetary support to its financial system because, again, all tides rising lift all boats. Final thing before we jump into the runner. Commodities are broadly outperforming equities in 2025, led by precious metals and industrial inputs. Obviously, oil is down this year, but that is going to be a key trend for next year, particularly China. We'll talk about this at the end of the broadcast, but I want you to keep this in mind. You have a battle that is effectively happening right now between OPEC and U.S. banks. U.S. banks firmly believe that we're going to have oversupply and oil is going to move lower, possibly even into the 30s. But OPEC is expanding its production because it is engaging in a full audit of all of their members, and it is reassessing all of their production, and then with that, they are anticipating higher prices. They are trying to get out in front of demand issues. And where would that demand typically have come from? Well, when it comes to supply in the global market, OPEC is the key player. When it comes to demand, that marginal barrel is typically purchased by China. Commodities will tend to front-run inflation pressure as well. That's going to be very critical because, again, if China engages in monetary support, engages in its own form of stimulus, that is bullish for their manufacturing, which pushes up things like copper. They are a manufacturing economy. When we engage in quantitative easing, when we engage in monetary support, it helps our banks because we're a financialized economy. So that's where we sit right now. Key signals, silver volatility is going to be critical moving forward. Copper firmness and energy holding despite that soft growth. We'll talk about where to allocate capital in 2026 on the energy side. Lana, welcome. We will get you a link in there for the 3TW, 3 trades, and you can name your own price. Couple of names here that have popped up for our long. Remember, at 9 o'clock, we do what is called the runner. We're looking at stocks that we're looking for a continuation and breakout, and shorts, stocks that are continuation of breakdown. Right now, Under Armour, we've seen some insider buying that has come through in recent days, and this is not exactly a stock that I am running to the market to try to purchase, but it was a sizable amount of insider buying, and this is one of those places where we start to see value investors. We start to see, the Michael Burrys of the world, even though he's not. I don't believe he's in Under Armour. This is where we look for that bottoming out, which came back here November 21st when Japan started to print and the U.S. began its support of the repo system. So Under Armour, what's the trade? Well, it's pretty simplistic. You just buy the stock, and currently trading under $5. You're looking for a continuation of momentum. You're looking for the short squeeze to continue. You have 21% of short float. So you got a couple of days of coverage as well, and you just set your stop right back here at that 100-day moving average. So if you're buying it here at 490, your stop is going to be pretty tight back at the 473 level. Occidental, we're long. Energy sector is still kind of negative, but we have woken up a little bit, and I like to see that EMA, that 20-day EMA, is pushing that 8-day EMA is pushing that 20-day. I want to see this get back above its 50-day moving average, and then looking for a move back to its 100-day, and I am out. I'm looking for about $1 move on Occidental. Name has just been in play, very low volume, but improvement in price strength. That's all I need. And you see the continuation of strength in the MACD and the ADX. Looking for a short move. I only need $1 to do damage and to be successful with the short duration trade. Really just looking somewhere in the at the money level. It could be a $40 call. It could be a $41 call going into January. Keep a tight stop. TSN Tyson, man, we're starting to see a little bit of movement now on the consumer defensive stocks. Took a while. Well, once again, this is where money will start to rotate in the event that we are moving into the back end of the liquidity cycle. When things start to get a little bit more tense, money flows into the things that people need, and they flow into they flow into dividend stocks. Tyson continuing its trend of strength. This is one of those stocks that, what do I want to do here? Rather than try to chase the upside, looking to sell spreads. So one of the things that we'll talk about today at 3 o'clock is trading TSN heading into next year and looking to sell a put down here around the $55 level and buy a put. And our goal here is pretty simplistic. We are looking for an 80% probability of success, a 20% return, a trade within 45 days, and an annualized return as well. Okay? So we'll talk about that trade later today. And then finally, watching TSM. So the semiconductor names are still in play. Taiwan Semiconductor continuing its strength. It's a great name to trade, and same thing, looking to sell this down under that 100-day moving average. You've seen we've had some pullbacks. It's bounced off this key level. That is all support for the stock. If I can just be under 4 support lines, that's kind of the way that I'm focusing. On the short side, MGM, not a shocker here, but these names, consumer cyclical space, this has kind of bottomed, that's kind of moved higher since that November 21st momentum switch that we saw. We pushed up about almost 30%. And now what goes up can and will come down. So in this environment, relatively simple, looking to do a put or a put spread, buying in the money, somewhere around the 38, maybe even 37.50 level, selling down at 35, selling down at this key moving average, maybe looking at the 35 level. And in the event that the stock does somehow recuperate and continues its move higher, I keep a tight stop of around 20%. We'll dig into that trade as well today. And Trade Desk, not a name that I am a huge fan of, but it is what it is. We get weaker. And on our 1-hour chart, we've seen continuation of breakdown. We break under that $38 level. That's where I'm buying a put into next week, probably somewhere at the 38 or the 37.50 level, depending on what the options chain is. All right. Other names that are in focus today, Nike got a $1 million purchase from its CEO. And, you know, will tell you that I have a little bit of bias against this company. Every time I look at the headlines, they're not good. So one of the things that I have to do is I have to recognize that my bias is not as good as Elliott Hill, the CEO of the company. So $1 million gets a nice little pop today. And we saw Tim Cook coming in, buying stock last week. I believe he had to do so for personal obligation reasons. But if you want to own Nike, if you are a person who thinks that the bottom is in and thinks that there's an opportunity to go long on the consumer cyclical side, and by the way, might actually do well if China does engage once again in production and support to their financial system, well, the trade is to sell the spread under where the executive bought the stock, or even under where Tim Cook bought it. Aiming for an 80% probability of profit, aiming for a 20% return, looking for an annualized of 100%, and Nike has a nice liquid options chain for you to do that. But I do want to stress this. Don't do it unless you want to actually own Nike stock. I'm not crazy about it, but some people are. Some people have like the brand strength. And once again, it is historically a very strong international brand. So if that is what you want to focus on, sell a spread to the downside, pick the price that you would be content to own it. And if the stock moves higher, the value of the contract that you sold goes down, and that means you're making money. NVIDIA and Tesla are also back in breakout mode. Tesla continuing to wake up again on our daily chart. We're going to look for a test off of this 50-day EMA heading into next week. Not going to make a huge move on this just yet, but if we hit 445, forgive me, that's where I'm going to be looking to do a spread on Tesla back to the upside. We have seen that Mr. Michael Burry came out and said that he is not shorting Tesla. In fact, it's more of a hedge position. And it's the same thing with NVIDIA as well. NVDA is seeing a continued bid. Pretty simple trade. You buy right at the key moving averages. You sell up here. You look for the stock to continue to move higher. And you take the gain. But you sell that spread because that spread will protect your downside a little bit in the event that it pulls back. Somewhere around that 185 to 195 level would be good. Possibly something even as simple as like a 187.50 and a 192.50 for a call spread as well. We'll dig into some of that later today as well. All right, let me hit the chat real quick. You're going to pass on Oxy. That's all right. Nike is looking. Well, look. It is chump change, but historically, and this is important, historically, it is a statistically significant amount of money. And that's what the academic data tells us. So, yes, I understand that, some people are against it. Some people have political views on it as well. I'm just pointing out that the CEO of the company put $1 million down. And according to the financial academic data, it is statistically significant, and it is probably more likely to move higher because, once again, CFO, CEO buying typically does see strong momentum start to return to stocks within the first 2 weeks to 1 month after that purchase. So it's not for you. That's fine. All right. Couple of moving parts. So heading into next year, this is it's going to sound like a cop-out. This is a very difficult market to navigate and to project for 2026. The violent move of silver in the last 6 months has been yet another massive surprise in what is easily one of the more unprecedented environments that we have operated in. And I wrote about a month ago, maybe a week and a half ago, that we don't have anything like what we have done in the last year, right? So we have a central bank and a Treasury Department that are fused together now. It's very apparent. You have China and the bifurcation, and you have this aggressive move on gold prices and purchasing of gold by central banks in the wake of what happened back in 2022 when the United States weaponized the U.S. dollar against Russia. Other central banks around the globe have been loading up on gold, putting that in their vaults because they recognize that if the United States can weaponize the dollar against Russia, they can do it to anybody. The big question for me, and the thing that I continue to worry about, is one of the core drivers of U.S. equity markets, which is foreign capital. So a lot of foreign capital has been flowing into the United States over the past 30 plus years. And resultantly, what has occurred is you have 19%, I believe, of GDP linked to the U.S. equity markets from foreign capital. Well, as I've pointed out a couple of times, and we've looked at that one very specific chart, valuation expansion here in the United States, the way that the equity markets went up in the last couple of years, going back to 2022, it was not earnings growth that did the bulk of the work. It was the willingness of investors to chase higher returns. They were willing to chase higher multiples. Something as simplistic as a higher price to earnings ratio, or EV to EBITDA or EV to sales, any of these metrics that you want to utilize. Somebody was willing to pay $2, $3 more, and it just kept going up. Only 5% of the 20% gains were driven by earnings growth. The bulk came from money, just more and more and more capital flowing into the system, which is why I continually show this chart, right? This is the global liquidity index created by Michael Howe and Cross Border Capital. And that right here is peaking. That is peaking at the moment. And it's a little problematic because, as you can see, when we have these peaks, there are typically large outflows. And when those outflows tend to align, it's a lot of foreign capital that can go pretty quickly. We saw a lot of money leave in 08 pretty quickly. The issue is that if international flows go, that the valuations start to compress because we might see some forced selling in passive investing. We might just see the leveraged funds start to dump equities as well. These are most likely the outcomes of what happened in 2022. We want to be watching where money is flowing. We want to be looking and seeing, is capital going back to Japan? Is capital going back to China? Is capital going to Europe? And we can monitor that relatively quickly. So I just want you to keep that in focus. We're watching oil prices because of OPEC and what's happening with U.S. banks. We have to see how much support the Fed is going to continue to provide to markets. We have China's monetary policy becoming the world's monetary policy relatively soon. And the question of, can value and quality finally get a bid this year? And we're going to talk about some of these names today. Once again, the companies that we've heard over and over and over again. This is going to be the year for value investing. It's been like this for 17 years. Well, if it does happen, what are the companies that you should be looking for? And what are the stocks that you should be trading? And how can you do that using momentum? Because if we are facing the possibility of stress in this equity market, and I'm telling you now, it might not be the first 6 months, but it's coming. It's coming in the next 18 to 24. And you want to be prepared for this, and you want to know, what is it that I'm going to buy? How am I going to defend my capital? And how am I also going to be able to collect enough cash? Because that's really where I think the point of this market should be. How do you get access to more cash so that you have more capital to trade and align with momentum as events align? These are going to be the 5 things that I will be focusing on more in depth on Friday when I do my 2026 annual outlook. And I just want to note, right, we're still looking for this catalyst. We're still looking for this catalyst to take us higher. It can't just be the Federal Reserve stepping in and providing support to the banking system. It has to be something dramatic. It could be a trade agreement. It could be alignment, a realignment in the financial system. It could be the end of the Ukraine-Russia war. But we don't have that note just yet. And the one thing that I will stress, the last thing that I want to stress before we wrap up at 9:20 today, is this idea that you have to be very cautious and recognize that as we move deeper into this cycle, there are going to be the likelihoods of what we call unknown unknowns. And an unknown unknown is the gilt crisis of 2022. It is the Silicon Valley banking crisis of 2023. It is the things that no one in the media has any insight into what's actually happening. And I've said this before. I don't know ever why this signal goes red for at least a week until after the event happens. It went negative on March 7, 2023. 5 days later, Silicon Valley Bank didn't exist anymore. It went negative in August 2022, and Liz Truss was out in England 2 months later. And once again, there was no media warning. So we will be very, very cautious in our approach. We will continually watch momentum, and there is a distinct possibility that the type of reversals that we have next year are just as often as we saw in 2022, which I believe were 7 total, where traditionally we only have about 1 or 2 sizable events in the equity markets. We had one in April of this year, and then the other one came right before Japan had to engage in its stimulus. So anyway, I'm going to call it a day. Does anyone include? Yeah. Okay, good. As far as everything else goes, I will be back today at 3 o'clock. I want to thank everybody for their time. As always, you could be doing a lot of things at 8:45, but I greatly appreciate you putting up with my scratchy voice. I want to wish everybody a very happy new year. And here comes Blake coming in at 9:20 to take you into the open. Have a great day, everybody.